What a big day, guys. We had a massive crash towards the downside yesterday, and starting today, we started to have a bounce, and you can see this massive wick. We had a lot of news coming in. You can see today we had a closed board meeting for the Federal Reserve. We've had massive whales taking massive longs today, and you can see Donald Trump persists to bring the tariff news, which has been massively impacting the crypto markets and as well the stock markets. So we need to be going through all the different charts I have prepared for you guys. I need to be looking at all the different scenarios and what is likely to be coming up next. So make sure to be watching till the end. Make sure to also smash up that like button. Let's try to get above 20 likes this video. That'd be absolutely amazing, guys. And with that being said, let's get straight away in towards this banger. Bow. So as you can see, this week we were not supposed to be having so much news coming in. You can see Monday is today, 7th of April from the time of this recording, and there's no big news impacting markets. And as well for tomorrow, however, from Wednesday going, we have our FOMC meeting minutes, and then on Thursday we have CPI, and on Friday we have core PPI, which actually is another indicator to show us how inflation is doing. But you can see today was actually jam-packed with news, so let's get straight away in towards the news. And of course, we had a meeting for the Federal Reserve today, so later on we'll be finding out in the meeting minutes potentially if there was any hints towards a rate cut. So an emergency rate cut might actually be a tactic or a response towards these massive tariffs that have been crushing the markets towards the downside. So again, this is something that we need to be keeping a very, very close eye on. So mark that on your calendars. That's for Wednesday. So make sure to be watching out for that, and I'll be covering that on the channel too. So yeah, you can see that recently Donald Trump has now imposed. So yeah, you can see after negotiations with the EU, Donald Trump has now actually proposed a 25% tariff on goods. So again, we need to be seeing if things will be getting better over the next few days or not. You can see that earlier today, though, we had a massive fake news announcement. There was actually speculation saying that Trump has actually announced that they were going to delay tariffs, and this was complete fake news. We can see that Goldman Sachs actually came and clarified that this was complete fake news that actually came out. This was not the case, and this sent markets back down. So you can see that we had a massive spike up, and then we had a wick towards the downside again because this was a fake news announcement. So that's something that explains what was happening earlier today. And you can see this hyperliquid whale actually went long right before that. And then shortly after, as we were pumping, he actually closed his position for a $1.87 million profit in just 3 hours from a 20x leverage long. And yeah, you can see that this whale has been just predicting the market quite well. So it's likely this whale is trading off of some information that comes out before the market actually hears of it. So it's always good to be keeping tabs of what this person's doing. But yeah, you can see that this is what's going on so far. And we actually had comments from BlackRock CEO Larry Fink saying that we're probably in a recession right now. So this is definitely something to be keeping an eye on, because the definition or the actual confirmation of a recession is 2 consecutive quarters of negative GDP growth. So you need to be looking at the end of Q2 and be seeing if the GDP growth is going to be negative again, because if it is, then we're likely going to be in a confirmed recession under the definition. But of course, the best way to actually look at it is to see how the market is actually performing. And you can see the stock market has been crashing, but again, we're on support, which I'll get into in a second. But just looking at what Larry Fink has said, this actually gives us a tone of how the markets are likely to trade for the next few months. So again, more on that in just a second. So yeah, the trade wars persist, and until this actually calms down, I think volatility still remains quite high. But again, that provides a lot of opportunity. So we need to be knowing each level in the market and having it marked out so that if we have a good opportunity, we know exactly how to take advantage of it. So it looks likely that we can actually start to move towards the upside, as that's where the majority of liquidity actually resides. So a short-term relief rally is definitely on the table. Now, of course, volume still remains low, so we need to actually be keeping an eye on the daily exchange volume, and you can see that it's still low lows, lower highs. So again, we need to be very, very cautious in these environments because anything can happen. So this is something that I wanted to point out before we get in towards the chart. So looking at the stock market, we actually came in towards massive support. You can see that this has been support since the COVID 2020 crash, and we've been holding this for about 5 years. So this is a massive, massive level, and it's not likely that we're going to break down straight away like hot knife through butter. But again, we're getting a bounce right now, and you can see the wick. You can analyze the candles and see that we're starting to move up. So I think that it's definitely likely that we can see some sort of relief rally in the next few days. And of course, we're having CPI news coming in on Thursday. So of course, we need to be monitoring this closely to be seeing if that's going to be a narrative to ignite a move towards the upside. So we can pay attention to this upward slope and parallel channel using our trend line, and you can see that we had resistance twice, which actually perfectly showed us where we were going to start to top out, and we actually started to move towards the downside. No support from the mid-range, but previously we had some inflections at that mid-range, but right now we came in towards the lower side support region and we're starting to bounce. So again, if we come in towards this upward sloping parallel channel mid-range again in and around the 5.5k mark for the stock market, then of course this might be another lower high where we start to move down towards lower levels again, and then maybe that's where we start to get a massive move, or this may be the bottom. So again, we need to be very, very aware of that, and keeping that in mind, you can actually see that we came in towards a massive support region. This was a December 2021 highs, and we tested our all-time highs right now at the 50% level, and we know our algorithms actually are programmed to buy a lot of assets as they come in towards the 50% mark specifically. So right now you can see that's actually allowed the S&P to actually start to bounce, and the news came out later that we had some tariffs and then it was fake news again, so it started to bounce in towards the 5.2k level and started to come down again. But you can see on the higher time frame, we're actually starting to bounce with a nice wick, so it shows some demand coming in towards that 50% level. Of course, we can move lower, but I think it's lower probability, and it's likely we can start to move in towards 5.4k on this chart here, which is the 0.25 level there. And again, that lines up with a parallel channel mid-range, so definitely keep your eye out for that. Now, of course, one reason why I think this was likely today, and we can see the effects coming in towards tomorrow, is a lot of people were expecting this Black Monday. Everyone was talking about a Black Monday. We know the statistics point to the majority of people being wrong. So you can see right now, that's the opposite of what's happened today. We actually started to see a bounce. So of course, I am staying a bit bullish here because I think we can start to reverse. But yeah, the short term, you can see Bitcoin after that news came down, but not as much as the stock market. We're still actually positive so far. So again, it's going to be interesting to see daily close, because the daily open is somewhere around 78k. So right now we're kind of neutral, you know, we are not really extending above our daily open. So we need to be keeping an eye on the daily close today, because if it's a pin bar candle or a candle that looks like this, then of course this is an indecision candle, a doji candle. So the next daily candle can be up or down. So we might actually start to just stay like this for the next 2 days. Then when we have CPI, we might break upwards and form a bullish candle, or we actually might break downwards. So again, we need to be marking out the levels and seeing which one is more likely. Now you can see we have a CME gap, and that's still unfilled from the weekend. So again, I think it's likely we can actually move in towards 84k before we get a move towards the downside again. So this is something I'm watching for the short term. I think that the CME gap tends to get filled a lot of the time. Not that I just think as well. Statistically, you can go back and look at the charts. About 90% of them actually get filled. So this is something that's pointing towards a short-term relief rally here. So you can see I tweeted about that earlier. Now you can see that liquidity as well. So a lot of it above us. So that's another point to the bulls. And you can see short-term sellers are actually panicking and selling at a loss. So you can see there was about 36,000 worth of Bitcoins actually sold in the past 24 hours from short-term holders. So this just points to panic selling in the market. And typically when that happens, we actually get a reversal. So definitely keep your eye on this. So that was a good tweet from Mr. Crypto. So check him out as well. And now looking at the next chart, you can see that again, the VIX has been spiking up towards the upside. And the last time we actually were this high was 5 years ago. So during COVID, and this was when people were thinking the world was going to end. So for us to actually spike in towards this region, you can actually see the effects of the stock market. This is not a short-term kind of dip. This is actually a big crash from our all-time highs. So again, I don't think that this will be resolved so quickly and we just pumped in a straight line in towards new all-time highs. I think that we need to be waiting for further confirmation from the Fed to be determining the next move. But this is a key chart to show the significance of this dip. So moving on, keeping that point in mind, you can see from yesterday's video, we exactly showed what happened. So it's similar to the video before. So it's similar to the video that I done quite a few weeks ago. So we had a sweep of this low and I was looking for a reversal. And again, we've actually swept our lows. So it's likely that we can actually fill our CME gap potentially before we actually pick a decision. And maybe that's a move towards a downside, or that's marking a short-term bottom. So again, this is a region to be paying attention because we kind of front run our previous highs. So this was a key level that we came in towards, and you can see how significant it is. It was the inflection point here where we got resistance, before we went through. And of course, we have an inefficiency candle that we came to fill. So that was a very big reaction zone where we wanted to see buyers start to step in. That's exactly what's happened. So we need to see a bit more confirmation because the trend is still down. We're seeing lower lows and lower highs. So we need to actually start to see some bullish price action from the bulls, you know, a higher high here. And then that's where we can actually start to say, okay, the trend is changing and we can start to expect higher prices. But until proven otherwise, you know, we need to be looking for lower prices, honestly. So a solid support region to look for is this previous all-time high. But again, a lot of people are calling for it. So the probability of it getting hit in the short term, just as people expect, is potentially quite low, and we might actually start to reverse from this point onwards. So be prepared if that scenario was to play out. But yeah, I do think that, you know, we've come in towards this pocket now. So we swept our previous month's low. So it's likely we can actually start to get some price action towards the upside, filling that CME gap. So that's what I'm expecting on that side. And again, you can actually look at the momentum and you can see that we're seeing bullish divergence. So price is giving us lower lows, lower highs here, and the RSI is giving us higher lows. So that's bullish divergence. And again, we swept our previous quarterly low and our previous month's low, also our previous weekly low. So again, big liquidity grab there. And a lot of people will be flipping bearish on clear support. So in my opinion, a short-term bounce is on the table. Now, if we actually get a big enough bounce and maybe in towards CPI, you know, we get a short-term bounce here for the CME gap, higher low, and then a bigger bounce, then of course we're going to be breaking this downward sloping trend line. This downward sloping trend line is a trend line starting from our all-time highs all the way back in late January. So this will be significant where we can actually get a bigger bounce in towards maybe yearly open or this underside resistance point. You can see that was support, lots of support here, and then we got a big rejection before actually coming and cascading towards the downside. Now, if we come back in towards support level that turning towards resistance, then that's a region where we can actually start to become more cautious, because that is a easy rejection point where we can come down and then, you know, people get too bullish at resistance as always, and we start to come all the way towards the downside, just like we highlighted on the channel before this massive crash towards the downside there. Now, another reason why I'm expecting a reversal here is Bitcoin versus the M2 money supply. You can see that when you offset it by 105 days, it actually has predicted the direction of the market. Now, of course, it's not going to predict a candle for candle, and it's not going to look the exact same, but the posturing is similar. You know, every time the global liquidity went down first, Bitcoin actually followed, and you can see that it predicted this move towards the downside here. So it predicted that we're going to have a bottom, and then we're going to come to point 3, and then we're going to come to point 4 and have a double bottom. So this is yet to be confirmed, but again, it's extra confluence that I am looking at, because again, I believe that liquidity drives markets. So this is definitely something to be paying attention to. And you can see here that we have a falling wedge in play. So if that was to play out and we break this downward sloping trend line, I think it's going to be a great opportunity to be taking a trade. So if you're liking the analysis and you want to be taking a trade, make sure to be checking that first link down below, because the first link down below is going to give you an opportunity to be trading with HyroTrader, which gives you up to $100,000 in funded capital. So again, you get to keep up to 90% of your profits. And the way this works, if we go in towards the challenge, you can see that stage 1, after you actually purchase the 100k valuation, and of course using that first link down below, you're going to be able to get a nice discount there. So using the first link down below, you can choose your challenge size. So perhaps you wanted to go for a lower one, but let's take the 100k since it's a nice round number, and of course it's more profits if you pass it. So you can see the profit target is about 10% to start with, and if you make 10%, you actually move from the evaluation stage in towards the verification stage. Now, when you get to the verification stage, you need to just make 5%, and then you get to the funded account stage where you actually get your challenge fee back, and then you're actually awarded a scholarship certificate to show that you're a funded trader. And of course, you have a profit split with a prop firm, so you're managing the capital, and you get to keep up to 90% once you scale your account. And of course, they keep the rest of the percentage there. So it's a nice kind of way to actually extract profits in the market, and you're actually trading on an exchange like Bybit. So you can see that they have Bybit API available. So again, it's very, very similar to the way you're trading, just you have a lot more capital if you aren't already trading with 100,000. So make sure to be checking that out down below. And if you want a trading community to be trading with, make sure to be checking out ArcX and be messaging their account to be seeing how to be getting involved. The death cross everyone's talking about has actually not played out this whole bull market, and I don't expect it to play out again. So this is food for thought, coupled with that global liquidity chart that I was talking about. So this is something to be watching out for. And again, you're testing this 50-week moving average. So this is looking quite good for a good bounce. And of course, you're still holding this trend, and the trend is your friend to the end of the trend. So this may be another macro higher low. So I will not be surprised if this is the bottom and, you know, the stock market actually does not pull back anymore. We actually start to bottom, and you actually look at Bitcoin and we actually don't come a lot lower like people are calling for. So definitely be prepared for that scenario. And we have the super trend indicator here, and it's another potential higher low confirming. So make sure to be keeping your eye out for that. And yeah, this is year 3 where typically we get altcoin season like I covered yesterday. So, you know, this is a time to be establishing your positions, because in my opinion, this is a low risk region in Bitcoin season where you want to be positioning an alt, because they've come down quite a lot. And of course, you know, me saying that, you might think like my altcoins are coming down heavily. I don't think it was altcoin season this year. Of course, the 4-year cycle predicts that every time we have Bitcoin halving, the subsequent year is going to be a massive year for your altcoins, where dominance actually starts to come towards the downside. So if that's the case, I do think that Ethereum will actually start to outperform very soon, and other altcoins too. You can see that this is your 2021 highs for Ethereum, and we never actually broke the highs. So in my opinion, a new all-time high is pending. So imagine if you're actually establishing your positions down here and you actually get a nice altcoin season very soon, maybe in 2026. So this will likely take a lot of months. But of course, if you actually position yourself quite nicely, you know, Donald Trump is buying, you could check this on chain, and a lot of big players too. So I think it's a decent region to at least be dipping your toes. And yeah, we'll be back tomorrow with more analysis. Jam-packed day today. So yeah, comment down below your thoughts. But yeah, that's it for me. Have a blessed rest of your day or night. Peace, guys. See ya. Bye-bye.